Thanks everyone for sticking around after I know Stani and Santi were a great way to start. But I think this is actually going to be really exciting as well. So I'm not sure, hopefully nobody was on their phone during the last panel, but you might have seen there was some news that came out. But S&P and along with Centrifuge and Janus is doing a proof of index. And they're going to be launching with that a S&P 500 index fund on chain, which is really exciting. And I think that, whoa, exactly. And especially after the Robinhood announcement yesterday, I think we can all understand where the space is going, and this is just the next step or another step in that. So with that, I'm going to let the panelists introduce themselves, and maybe Cameron, I'll start with you.
Hi everyone, I'm Cameron Drinkwater. I lead product globally for S&P Dow Jones Indices. Thrilled to be here.
Nick Cherney, I'm the head of innovation at Janus Henderson. We're a global asset manager with about 300 billion in assets, and I run our tokenization efforts.
Hi everybody, my name is Jeroen. I'm the CTO at Centrifuge.
Bonjour, I'm Ryan Nitz. I lead solutions architecture at Coinbase. We work with our partners and our clients on designing their bespoke solutions.
Great, and I'm Rob Hadick, a GP at Dragonfly. So Cameron, I want to start with you on this really exciting announcement. Can you just level set for the room? Like, what is a proof of index? How should we be thinking about that in terms of different fund structures? And how does that relate to your traditional and core business?
Sure, thanks, Rob. So proof of index is Centrifuge's data product. It will feed S&P 500 index data directly into the smart contract for the tokenized fund on chain. It will also enable automatic rebalancing of the fund concurrent with the index in real time. Proof of index can be used to license the S&P 500 index data natively on-chain for other use cases as well, which we're super excited about. And I think if you take a step back, S&P Dow Jones Indices has been licensing our index IP for different product wrappers for over 125 years. And so we are thrilled for this next evolution, which is a tokenized fund directly on the index. We think it has a ton of use cases, which we'll talk about today, and is the next gen of what we've always been doing.
Awesome. Nick, maybe I want to talk a little bit about Janus Henderson. So you guys have been issuing and managing product on chain with JAAA and now the CLO strategy as well. This is, I guess, the third thing that you guys are doing on chain. Talk to me, like, why does this matter for Janus? Why do you see this as an important part of your overall strategy?
Yeah, I mean, for us, it's pretty simple, really, which is that at the end of the day, like our job is managing assets on behalf of clients. And any way that we can do that more efficiently, we have to try to embrace that. And there's a lot of sort of boring cost-saving elements that we think about in our business all the time. And ultimately, many of those elements, our kind of thesis is that is it inevitable that they will collapse onto on-chain systems. It might take a long time, right? Like, in the US, we still operate most of our business under the 1940 Act, right? And some of it under the 1933 Act. And like those regulatory frameworks have been around for a very, very long time. And then there's all of this sort of architecture in financial services that has built up over many decades. But I think that it will very likely collapse or sort of accelerate the transition will happen at some point very, very rapidly. It was mentioned earlier by Stani about, just going from paper to digital. And you see sort of this like acceleration of market infrastructure. And what tends to happen is it kind of is out there, people know about it, and then all of a sudden it appears to happen very quickly, but that's usually because of decades of sort of development behind that. And so our whole kind of thesis is this will happen very, very rapidly at some point. We don't know exactly when that point is, but we want to be established when that does happen.
Yeah, it makes sense. Maybe expanding on that a little bit, you talked about, with Stani and the fireside that happened earlier. One of the things they were talking a lot about was lending on chain and fixed income. Most of what exists on chain in terms of tokenization is today some form of credit product or fixed income product. Why now for some kinds of equity products? Like, why do we see that as having PMF? That market, I think, is about $350 million on chain relative to the $14 billion of total tokenized assets. So what's the reason that you see this as the next step forward for Janus?
Yeah, so there's two sides to it. So the first is that it's true that it's mostly lending today and in yield markets, right? I mean, there's a reason that last week's announcement with Centrifuge was for $1 billion allocation into the first tokenized CLO product, and today we're announcing the first S&P product. It's not coming yet with $1 billion allocation. But if you look at, for example, the ETF market, right, global ETF market is something like 15 trillion in total assets. 1.5 trillion of that is just the 3 largest ETFs in the world, which are in the US, right? You have 3 different S&P 500 ETFs, each of which is $500 billion. So 10% of the total market is just those 3 products, right? The first kind of large ETF was SPY, and then you had people come in and obviously offer lower pricing, et cetera. But the very largest, most liquid, most traded, most recognized investable asset in the world is still the S&P, right? So if we're serious about bringing traditional investors on chain as opposed to continuing to, and it's not one versus the other, I think it can be both, but a lot of what's happening is increasing the utility of what's available in DeFi markets versus bringing off-chain investors on chain. If we're serious about it, the starting point has got to be S&P, right? So I think this is a really kind of watershed moment to be partnered up and launching this fund.
And not to pick on you, but I actually want to follow-up question on this, which is, for the JAAA and for the CLO strategy, do you have any idea how many of the investors are net new to these types of products?
Today or will be?
Well, today.
I mean,
And I guess, what do you think it will be eventually?
I mean, today we just announced this launch. It's an investor, it's growth, right? So that's 100% net new, I guess. I don't anticipate in the near term, personally, that there's like a significant shift from our existing JAAA strategies, which trade in Europe, trade in the US, et cetera, into on-chain. I think the starting point is going to be integration and saying, okay, listen, there's this huge market that exists in traditional kind of investment access points, whether it's brokerage accounts or whatever, and DeFi market saying, okay, like why is that growing so rapidly? Like what is the use case for us in DeFi? I think that's where it will start. But having these sort of parallel products be successful in both worlds, I think does accelerate the sort of the crossover.
Okay, great. Jeroen, I want to talk about Centrifuge a little bit. So Centrifuge is obviously an OG in trying to offer tokenization as a service on-chain, allowing people to come on-chain. But I think from my perspective, and I've been coming to these RWA summits since the beginning, we've really seen this market pick up over the last 18 months in a real way. We've seen a lot more interest in that period of time. What do you think has changed on the infrastructure side, or is it more regulatory, or is it something else that has allowed for that pickup to happen now?
Yeah, the first thing I would point out is the fact that the biggest change has been the partnership between technology platforms and that are DeFi native, like Centrifuge, with institutional asset managers and other institutions coming into the space. I think 24, 36 months ago, I was very much working in isolation, and a lot of the asset managers were still kind of playing around with proof of concepts, and it was just a very different market they were building into. Centrifuge was building things mostly on their own as well, and it was really hard to kind of set up deeper partnerships. I think that has fundamentally changed. Like all the products that we're launching now are very deep partnerships between all of these kind of market participants that are experts in their own field and really ultimately creating a better product overall. And I think that last thing is also really most critical here with this particular product, right? Like we've seen wrappers of off-chain financial products already so far, but really what you have there is you have ultimately worse products than what you can already buy in traditional capital markets. So I think, like Nick is pointing out, like for existing investors, it's probably not very likely that they're going to buy on-chain products yet. But I think what we're trying to work towards here, what is the vision, is that it is ultimately creating a better product. And I think creating the better product comes from natively tokenizing it, bringing in proof of index, bringing in all of these components, and then really using DeFi, right? Like really using DeFi to this full extent, integrating these products into all these DeFi protocols, into all these different blockchains, into all these different platforms. I think that's when you really get new utility, new distribution, new value that is overall going to lead to a product that even currently off-chain investors, as we would say in kind of the blockchain space, would even be compelled to move over and start allocating directly on-chain. I think that's 2 years ago, that was very, very far away. Now we're not there yet, I would agree with Nick, but I think we're not that far off anymore.
Anyone else want to add to that, or do you all agree with that? Do you want to add, or you agree? No? Okay, all right. All right, Ryan, so as I understand it, this product is going to exist on Base. Coinbase has obviously been talking a lot about tokenized equity, has been talking about tokenized assets more broadly. With the Robinhood announcement yesterday, obviously they're coming on chain in a real way. How do you see Coinbase playing a role, and as a coming from a crypto native side of bringing these traditional assets on chain, and how do you see that differentiation between, or is there a differentiation between what Base is going to be doing versus what Coinbase is going to be doing?
Yeah, absolutely. Thank you. And as a recent addition to the S&P 500, we're excited to see tokenized coins coming out through this fund. So it's really exciting to see more TradFi players coming into the space. That means that the pie is getting bigger. One thing that's important, though, is that Coinbase isn't exactly new to on-chain activity. We've been here for 13 years, building out not only the retail business, but the institutional business. And so we're able to partner with a lot of these tokenized assets in order to provide on and off ramps, custodianship, liquidity. We have an on-chain Prime on-chain wallet, which bridges that on-chain interactivity or interaction with the smart contracts and allows these larger institutions, many thousands of them who are already actually on the Coinbase Prime platform, to actually come in and subscribe to these products. We also have, Stani was talking about the importance of stablecoins inside of the RWA space, and that's critical. We offer convertibility between USD, USDC, and we don't actually trade that. It's actually a conversion, a one-to-one conversion, so that people aren't, kind of at risk of depegging, et cetera. I think, the other kind of important part that doesn't get a lot of press about Coinbase is that we are already providing sub-custody solutions for GSIBs and other SIFIs. And so we have the infrastructure that's going to power these kind of traditional players who come more and more on-chain. So I think it's just amazing to see the RWA space kind of bridging out there, and how we can actually take existing infrastructure and empower these new players who need to move quickly.
Great, makes sense. So I want to go.
Can I ask a Coinbase question? So 1993, first ETF launches, right, on Amex. Today, if you look at TradFi exchanges, 30+% of global trading volume is ETFs. So how do we get Coinbase to be the Amex of the early 90s and bring RWAs to Coinbase investors?
Yeah, so on our side, we're really excited, like partners like Centrifuge who are actually doing the tokenization of that. And in terms of like providing liquidity, that is something that we're definitely exploring and excited about in the future.
Sounds like we got work.
Okay. Makes sense. So I want to go back to Cameron and Nick for a second. So talk to me a little bit about, how you see your business's role in the future on-chain economy, and what is your perspective or expectation about how you continue to play or even deepen your relationship with being on-chain? And maybe Cameron, we'll start with you.
Yeah, look, for 125 years, S&P Dow Jones Indices has offered trusted benchmarks to investors everywhere. And at the heart of that is choice and access. And we see tokenization as a way to propel both of those two things. And so if you fast forward, I hope you'll see our business playing two main roles. The first is continuing to build out digital asset benchmarks that allow investors to compare performance and risk across their investment portfolio. The second is to bring more of our existing indices into a tokenized wrapper that give on-chain investors, as well as the billions of investors, potential investors around the world that don't have access to traditional investment products, the opportunity to diversify and benefit from the high-quality IP and exposures that we make possible.
Yeah, I think I kind of laid out the big picture vision. I think where we see ourselves being able to have an impact in the short term, in the next couple of years, is being leaders in finding those intersections, right? So like JAAA is a wonderful example. This is another wonderful example, and only made possible really through the partnership of Centrifuge. But can we find like interesting today use cases where we can create this crossover? I think we are quite a ways off, and again, maybe it happens more quickly than we expect, but I would be personally quite surprised if in the next year or two you saw like a mass adoption of traditional investors into tokenization. I think where we have to play is like in this intersection to slowly bring those people over, and then ultimately it's going to come the other way. It's ultimately going to come from tokenization of like traditional investment products as opposed to just continuously launching new product.
Do you think there's infrastructure that is lacking to get all of these traditional investors on chain now, or what do you think is going to be that pivotal moment that will bring them on chain?
It's the fact that today, if you're a traditional financial player, whether you're an exchange, whether you're an asset manager, whether you're a broker, whether you're an advisor, like kind of anywhere that you sit in the ecosystem, there's just this incredible inertia and switching cost. And so today, when you look at it, you say, okay, in the future, clearly this is better, but how much am I going to invest today for what is going to be a pretty expensive switching cost, and nobody's there yet. So nobody wants to go first. So everybody's sitting around looking at everybody else and being like, okay, I'm not going to make this investment until I have to, right? Because it's very expensive. So if you go to your boards or your investors and say, oh, we're going to we have this huge project, we're going to just move everything on chain. They're like, what are you talking about? Like that's an enormous amount of money and there's no ROI, right? So you have to see basically the growth of these types of projects accelerating, and then all of a sudden it forces that, right? I think there's no FOMO yet, basically, and when there is, then it'll switch.
All right, so we need FOMO. Got it. Jeroen, from your perspective, coming at it from a builder's point of view, do you think there is infrastructure that's still lacking, or what do you tell Nick and what do you tell Cameron when they come to you and they say, hey, we're not sure if this makes sense for us? Like, how do you get them convinced?
Yeah, I think like the situation we've been in for the last few years is that every RWA issuance, every single asset has been kind of a one-off case where we're building everything from scratch every single time. And when I say that, I'm not just talking about the on-chain piece and the protocol. I'm really talking about the off-chain infrastructure, the integration between the asset manager and the on-chain tokenization platform and all of that. I think what we're starting to see now, as we're launching now the third fund with Janus Henderson, is you start to see kind of gains from standardizing and building on the lessons learned, and really creating a layer that both kind of all of the participants trust and can rely on, and that can start to create ultimately a standard for tokenization, which will lead to ultimately the lower kind of initial cost to get something off the ground, which will ultimately lead to more assets on chain and kind of create that virtuous cycle, right? So I think that standardization and kind of learning from what we've started with is incredibly important. Beyond that, I would say really it is about user experience for institutions that are participating in this market, right? Like building on, all of us DGens know, using different blockchains, using different L2s, there's a huge hurdle for that. And I think making that easier, the work that Coinbase is doing, especially on that, I think is incredibly important. We can't expect institutional asset managers to be running wallet infrastructure, custodian, all of that for every single blockchain and manage all of that fully bespoke. We need to standardize that, and we need to make just ultimately a great user experience so that we can really start to offer kind of the value of blockchain to everybody.
And Cameron, from your perspective, when you were, I'm assuming, having a number of conversations trying to figure out who you wanted to collaborate with, why was it Centrifuge? Why was it, Base? How did you decide to make those decisions?
Great question. Look, over 125 years, we've innovated into new product wrappers several times. And every time we do that, we look for a few things. First and foremost, we need partners who are established and adopted by institutional investors. But then just as importantly, we need industry-leading security, compliance, and scale. And so, Centrifuge is the first purpose-built RWA tokenization platform, but then we looked at things like their long-standing partnership with Sky as very public evidence of the quality and security of their technology. With Base as the blockchain partner, same criteria applied. We looked for a blockchain that could hopefully support massive frequency and scale in the trading of this tokenized fund. That was there, but then we needed the security and compliance best in class, natively available, and all of that, made Base a great initial launch partner.
Yeah, makes sense. So Ryan, I know Coinbase also, you guys have an asset management division. You guys talk to a lot of traditional asset managers as well, and I think sometimes you guys are a bit of a Sherpa of bringing people into the space. when you have these discussions with maybe not the group that's up here, but a broader set of asset managers, how do you convince them, or what does that conversation look like from Coinbase's perspective on bringing programmable like index products and asset management products and distributing it through those traditional rails, or do you see that happening anytime soon?
In terms of, at this point in time, we generally loop in our partners like Centrifuge, et cetera, for the tokenization of it. It's less of a, kind of outreach and a sale process. It's more along the lines of, usually it's inbound and coming to us, looking for guidance, looking for recommendations about who to work with, who are trusted counterparties, et cetera. So that's more along the lines of how we're engaged on that. But then they're also looking for the existing parallels to what they have in TradFi, and a lot of those components, those are things that we are able to offer, so that they're able to, feel more comfortable about, converting those assets into stable coins, et cetera, and getting those into the RWAs.
Okay. Maybe I want to hear from Jeroen and from Nick on this one. Do you think these types of tokenized, these types of products are going to eat into the market share and the size of traditional products? And if you think that'll happen, when will that happen? Maybe Jeroen, we'll start with you.
Sure. I definitely think that's going to happen over time. I think we have to be pragmatic and realistic about where we are today. I think we just mentioned there's a lot of stuff that needs to be built still. And I think it's very realistic that it will take some time to get everything off the ground. This is still the very first index product. But I think what's going to be really interesting is once you start to see really the benefits of DeFi, right? Like what I was talking about before, when you start to see this kind of the composability building on top of this other, being able to use other protocols like Morpho and Aave and Euler and integrating all of that together, I think that's when you'll start to see real value moving over into blockchain native products. And I do think that's going to happen sooner than we expect.
Do you have a time frame? Is there a date that you think that'll happen?
Nice, you're putting me on the spot. I think the reality is, right, I think we'll start to see percentage points gains in the next 18 months.
Okay. Nick?
Yeah, this is kind of goes to my point about there not being FOMO yet from traditional asset managers, but I don't think that's a negative, right? I think what's going to happen is there's this huge pool, and Cameron was alluding to this earlier, right? That there is a huge pool of DeFi users or even potential DeFi users who, that's accretive, right? These are people who today have no way to invest in the S&P, right? Or at least, maybe in theory they could, but for the sizes, for whatever, they are not going and opening a brokerage account, or they're domiciled somewhere where they can't get access, et cetera. So I think there's actually an enormous amount of growth potential from within DeFi, but a different user base, right? So that's all accretive. And then ultimately, if that can scale enough, and this is where the DE tokens that Centrifuge has announced is a critical component of this, because it helps kind of cross between this sort of very traditional regulated market into kind of DeFi markets where there's some gray areas that are not that comfortable for organizations like us. So as you sort of make that sort of those incremental leaps, I think you can see significant growth that isn't in any way taking market share. And then at that point, I think what you see is a transition, right? And that tipping point, if you're going to ask the follow-up question, when is it? I think that's a very, very, very hard to predict. But our kind of strategy is to be prepared for an unknown date of transition, right? And say that could happen as soon as. And when we talk about internally or with our boards or anything else, I often use the as soon as a couple years, right? I think that is a reasonable possibility. It's not 12 months from now, that tipping point. But I think you could see with the rate of growth, if things continue to accelerate, I think you could very easily be 12 months from now, it is obvious that there is something happening. And 2 years from now, traditional asset managers saying we have to engage. I think that's a very reasonable timeline. Maybe it won't. Maybe it'll be 5 years. We don't know. And so we're going to invest accordingly for that kind of unknown date. But I don't think it's at all crazy. And certainly in 2 years ago, if I'd said to people it's 3 or 4 years out in traditional boardrooms, they would have just laughed at me. Today, when I say, hey, maybe it's 2 years out, people go, oh shit, that's the response, right? It's not, so I think it is accelerating.
Cameron, what about you? Do you have a perspective?
Yeah, look, I think we talk a lot about ETFs and the market share and investor wallet that they've been able to gain. But, sitting here in Europe, ETFs make up about 12% of registered funds. They ended last year with 2.3 trillion in assets. That's still a distant, lag versus the U.S. market at 25% and 10 trillion thereabouts. There's also a huge investor base that is not invested at all. And so when we talk to regulators and exchanges and asset managers across the globe, one of the biggest questions is how do you bring non-investors into investment products? And I think tokenization of index funds is the natural place to do that, offering diversification, high quality investment exposure, but in a wrapper that is much more accessible. At S&P, we follow a number of big trends right now. One is an unprecedented transfer of wealth, 84 trillion or so, going from prior generations to millennials and Gen Z. The other big attribute is millennials and Gen Z are investing their wealth radically differently than prior generations. 3 times more of their portfolios are in alternatives, which have a lot of operational benefits on chain. And so we do see a sea change potential, but it's going to come from natural allocations of a next generation that make a lot more sense in a DeFi construct, and then seeking the same diversification benefits that they look for across assets in TradFi today in the same kind of investable wrappers.
So when do you think it's going to happen in a real way?
Look, I'm with Nick. I think 2 years is reasonable to start seeing a tipping point. I think you're also seeing, Gen Z is also investing a lot earlier too. So, there's institutional use cases on chain today, but I think you're also seeing a generation that's investing their wealth earlier and digitally native in much higher proportions than they did historically, and they're inheriting a lot of wealth. So, to me, that speaks to great tailwinds for the opportunity.
Yeah, I definitely agree. Nick, when we talked about this beforehand, you made a comment that I thought was really interesting, which was that eventually the pools of capital will be the same, off-chain and on-chain, or they have to be the same for this really to work. Can you just expand on that a little bit, and how do you see the pools of capital actually converging in a world where we have, very regulated products and, then a regulated institutional tokenized wrapper, but then DeFi, which is in many ways unregulated, and how is that going to converge?
Yeah. Okay. I'll give you just a very simple beginning point, which is that it is true that we're sitting up here talking about the launch of S&P 5, which I think is a very critical element to sort of getting people to understand this crossover. But the reality is there is a $6 trillion, I think maybe today $7 trillion money market fund business just in the US at roughly 20 bips. Massive industry, right? Absolutely massive. There's a reason for the yield focus. There's a very, very long way to go in just tokenized treasuries or minor yield enhancement like JAAA, right? So there is this massive pool of capital that is today being served by DeFi markets, right? And so that will continue to move people over. And then ultimately, it's regulatory, right? So that to me is the critical thing. Maybe I'm front running questions at the end, but the big prediction from my perspective is that what will cause a massive acceleration is actually not this kind of continued evolution of native DeFi, but just this move from TradFi over, and that's going to be regulatory. So I would say, personally, I think it's no more than 5 years out that the major fund structures in both the US and Europe, so 40 Act and UCITS, you just have to have tokenized share classes, right? So when that happens, that's just an instantaneous move, right? So there's all of this noise today around ETF share classes in mutual funds in the US, which is, it's a big deal. We're very engaged in it. It's like a baby step, right? If you instead can leapfrog that and say, well, why not just have tokenized share classes? And then in the 4 or 5 years, my question when I asked that to Coinbase, they, instead of not being able to answer it because of regulatory constraints, it's well, actually all the regulatory framework is there, so yeah, we're live, right? And so now all of a sudden the entire fund complex, and this is the same in UCITS, right? The entire fund industry, the entire asset management industry just has tokenized share classes, and it's a seamless transition. I think that's what actually happens. But the whole reason we're not sitting around waiting for that is what's going to drive that is products like this, right? What's going to drive that is bringing sort of traditional looking financial products on chain first, and so those like the amount of intersection between the worlds increases, and then I think what happens is all the traditional players just simply offer tokenized versions, and we just that's what accelerates the movement to the rails, because it's optionality. Then if you're a 70-year-old retiree who's getting ready to pass off your retirement assets at some point to your kids might want to be on chain, but you don't want to move today. Well, when both things are possible, and there's this huge wealth transfer, which ultimately means people die, and then their kids have to go through the process of figuring out what to do with the assets. If it's seamless to be like, oh, actually I can just have this tokenized, I don't have to sell all this stuff and move it into Coinbase, I can just like flip a switch internally and be like, all right, now I have a tokenized version that happens to trade on Coinbase, like that will rapidly accelerate things. So that's why I say I don't think it's these two different worlds that are going to evolve in parallel forever.
Ryan, maybe from a Coinbase perspective, Coinbase has obviously been kind of at the forefront of the centralized exchanges in terms of launching their own chain, bringing products on chain. You guys have this morpho distribution where people are doing Bitcoin collateralized lending on chain, but through the centralized platform. Are you worried that from your centralized business is going to be vultured by an on-chain business, or do you see it just as a TAM expanding for both sides?
No, we're definitely excited. As the rate of innovation increases, as technology advances, we'll move more and more of the business on chain. So there's definitely, one of the questions was, how do we get more, or what infrastructure is missing for on chain in terms of how do we accelerate the adoption? And there's definitely a lot of that infrastructure that still needs to be built, and we're helping build it, and we're working with other people. So, if you just look at the Oracle infrastructure right now, that is good, but it's not even remotely where it needs to be. If you look at something like Bloomberg is updating like 69 million data points per day across 147,000 funds. And so that type of infrastructure isn't remotely available for publishing on chain. Jeroen talked about user experience. Like the user experience is still not what it needs to be. It's getting better and better and better, but we have a long ways to go before that is going to bring everyone on chain. This is also some of the blockers in terms of predictions. Other things are related to like privacy. Like not everybody wants their book open and available to see what they're doing, and so these type of innovations, and that's definitely something we're working on at Base, is how do we do private transactions so that you're not just your entire positions aren't available for everyone to see. I also see, also in terms of like what's a major blocker, you're also looking at, and one thing that we're tackling, which is USD, USDC, and stablecoin fungibility. So traditionally, you'd have to go convert it from USD to USDC. One of the things that we're releasing now is just USDC, USD fungibility, so you'll be able to trade with USDC and not have to actually convert it out in order to swap into different tokens. And we think that will not only occur at the centralized level, but as that occurs, then people are swapping out of USDC and retaining those tokens, and that's where you start to see the flywheel really start moving forward, where people aren't, and these are the separate pools as well, where people aren't converting back to fiat.
Got it.
But long story short, we're not concerned. We're helping provide the infrastructure and enabling a bridge between the TradFi and the on-chain world, and we will move even more on-chain as the technology permits.
Awesome. All right, so I'm going to do rapid fire. 2 last questions. 5 years from now, tokenized assets are still under $50 billion. What went wrong? Why has it not taken off the way we all thought it would? Maybe Ryan, we'll start with you and we'll go down the line. You can't all say regulatory.
Yeah, I'm glad I'm going first here. So if RWAs don't move beyond on-chain treasuries, the industry will never get to what we're looking to be. So if that happens, that'll be a huge issue.
Yeah, I actually wanted to say the same thing. I think not actually creating better assets. I would say beyond that, I think the complexity of blockchain technologies and not really solving the UX around that, right? Like I think we're going to see many more layer 2 blockchains, like the Robinhood announcement was a great example. That requires a whole different breed of solutions to make that manageable for institutions, and I think we're very far from that, and that is a problem we still need to solve.
That's not a possible outcome. Like there's just no way that that's happening. I mean, that would be a massive underperformance of like even a median bet on what's likely. I mean, again, it's not because there's going to be $50 billion of like very exotic hedge funds that are tokenized, which has been like the traditional model. You just have mainstreaming of the tokenization of like highly fungible and highly liquid assets. Like there's no way that we're not going to hit that number.
So look, the single biggest determinant of success in an index-based product is distribution. And we internally, with our executive stakeholders, use an IKEA example a lot. So IKEA didn't invent the dresser. IKEA invented flat box shipping of premium Scandinavian design globally. And I think about tokenization in much the same way. And so if we're sitting at sub 50 billion in assets, distribution failed, plurality of choice in the index-based products failed, but that's the only holdup. Otherwise, all the benefits are very clear.
All right, last question. And Cameron, I'll give you the first word this time. What is your most controversial or just the prediction from 5 years from now that you would like to make on this stage about tokenization?
I think 5 years from now, a controversial take would be first-time investors are entering the market for what we would consider TradFi native products, public equities, public fixed income, through a tokenized index fund for the first time. So not going into TradFi, going natively into the tokenized fund. And we hope they pick the S&P 500, as they have in mutual funds and ETFs, as their allocation of choice.
I already leaked it earlier, but I mean, I think there'll be tokenized share classes of traditional fund complexes in the two largest global regulatory systems. So both US 40 Act and European UCITS funds. I think you're just going to have broad-based tokenized share classes within 5 years.
Yeah, I'll be honest, my original answer was more around adoption and how quickly it's going to grow. It sounds like that's not as controversial. I think we're all very bullish, which is great to see. The more controversial take I would say is I think every major institution will have their own layer 2 blockchain or somehow their own blockchain. And I think the downsides of that, which we see today, will be resolved at that point.
I guess the most controversial statement would be transfer agents go away or are significantly shrunk. We have a lot of the functionality built into the blockchain already that a transfer agent does, and so I think it's a critical time for them to either adapt or go by the wayside.
Awesome. Well, let's give a big round of applause to the panel. Thanks so much, and congratulations on the product announcement.